Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, now take a look at the gold market. So guys, as you can see, there's not really significant progress since our recent discussion during the weekend, the situation on the gold market. We said that as market has formed significant bullish patterns on the weekly chart, it's really unsafe and could be really expensive to take the position against these patterns. And these patterns are bullish grabbers that suggest the taking out the 14 even top on the weekly chart. That's why currently it's reasonable that we have just one possible choice: either do nothing or trying to trade the bullish patterns. And from that perspective, as we said, the situation stands relatively simple, because on the daily chart we are interested only with this recent swing up, because that's the swing of the bullish grabbers. And here, if market will stay inside of this body of these grabbers, find some support and reestablish move up, they will work. Or if market will taken out of these lows, 1280 lows, then they will fail. That's really simple. That's why if you are bearish, you probably better to wait when the market either will erase these patterns by moving below 1280, or when it will complete the targets of these patterns, and then decide whether you would like to take the short position or not. For others who would like to trade the gold on the long side of the market, our major task here is to take the position as closer to these lows as possible. And from that point of view, our major concern stands around this retracement, whether the market will form deeper retracement or not, because yesterday market has reached the level that we have specified as the first suitable level for taking the long position. Second level stands a bit lower, so we will see it on the 4-hour time frame chart. The bullish sign that we here could see on the daily chart is the market has tested the weekly pivot point, held above it and jumped up. That's really bullish. But this spike up and reaching of the significant resistance 1312, that is also monthly pivot resistance 1, points on possible deeper retracement, because this long tail candle suggests the possible deeper retracement. That's why it's not quite clear, it's not quite obvious that market will stop retracement here and turn to the upside. Besides, the gold market is the commodity that likes to show the deeper retracement. And this retracement in general possible because you can see that in this swing stands inside this previous consolidation that will also give the support to the market as these consolidations, and the market already stands with this support, this consolidation has found this support and moved up. So let's take a look at the 4-hour time frame chart. Trend is bullish on the daily chart. On the 4-hour time frame chart, trend is still bearish, but we can see this spike thrust up right from this area that we have specified here. Also the FIB support with 1306, the FIB support area, and it coincides with the weekly pivot point. And in general, this action looks bullish because market has bounced up, probably it should continue move high and so on. But I suspect that this downward retracement is A, B, C, top, D retracement is possible, because if market will start move down right from this point, we will get the agreement right at 1295 area. So 618 support from this most recent swing, and due to this move down, it really seems possible. On the hourly chart, conversely, on the hourly chart, if you take a look at the development that we see here, trend shifted to the bullish side. This action, previously we said that maybe market could form something that could look like the head and shoulders, although they are not very harmonic. Shoulders are too small compared to the head and so on. And right now the development doesn't look like the head and shoulders. So it means if market hasn't formed the bearish pattern, it really has chances to continue move higher. Besides, recall that here we have expected to get butterfly that suggests the deeper retracement, but this also hasn't happened. Market turns up right from the weekly pivot point, and that looks really bullish. And with this situation, the possible way how we could act seems reasonable to take small position somewhere around there, because situation is really tricky, and from the one point of view it doesn't deny absolutely the possible ABCD retracement down, but at the same time this recent action has more bullish signs, bullish character rather than bullish feature rather than bearish. Because if market really has an intention to continue move lower, it probably could do this based on this butterfly and could show a retracement, say, to the weekly pivot support one, for example, or at least deeper to the downside. But this hasn't happened, and that's why a reasonable way how to act here is to take in very small position, for example 20-30% of your normal position somewhere in this area. And if market suddenly and finally will show this ABCD retracement to the downside, take the major part of your position from 1296. In this case you will get some average position somewhere at the level of 13 even, and that will be absolutely acceptable when you're trying to trade on the weekly chart, because your target will be the $100 higher, so 14 even, and that's really will be a nice opportunity for enter. This is so-called step-in entry. Well, the conservative tactics will suggest just waiting when the ABCD retracement will happen and attempt to take in the whole position at 1296 support, somewhere around this area. But in this case, if market will start move up, you will miss the entry from this support area, and you will have no position, and you will not have no participation in this possible action to the upside. But in this case, you will be able to take the position on the next retracement, minor retracement on the intraday charts, maybe tomorrow, maybe within the couple of sessions, I suppose. This will be possible. So decide what to do. Choose first what your opinion on the gold market, whether you're bearish, you're flat, you're like to take the long position. If you would like to take the long position, you could apply one or two ways that we have just discussed. Either trying to take small position here, then add more if market will start retracement lower, or just wait when this ABCD will happen, because chances are really not small that this ABCD really could happen. Mostly due to this pattern, because this you can see a perfect evening star have been formed. It's really big candles, and usually the target of this pattern equals to the length of the bars to the downside. Now you can see just the retracement inside the body of this pattern. In this case, this ABCD is possible. Besides, for gold, as I said million of times, the deep retracement is the habit. So the chance is really not small that this retracement will happen. So that two possible ways how you could enter and take part these bullish grabbers on the weekly chart.